let's talk now about the proposed 2026 spending bill. So earlier in the week, we got that report. The federal government is released the 2026 to 2028 medium-term expenditure framework that projects a total spending envelope of around 55 trillion for 2026. Revenue is expected at about 34 trillion and deficit of about 20 trillion. If I check correctly, that's about 3.6% of our GDP. The government is also benchmarking crude oil prices at about $64.85 per barrel. Exchange rate is projected to be about 1,512. In my view, I believe this is a conservative estimate that reflects prudence amid the volatility that we've seen in the last couple of years. So, Andrew, how do you see these assumptions, given that we are talking about budget assumptions that rarely match or keep up with the expectations? So how do you see these key assumptions, the overall fiscal framework compared to what we had in 2025 budget?
Okay, thank you. The assumptions appear more realistic compared to previous years, where there's a significant divergence between what the production volumes, the actual production volumes against the projected average oil price levels, and then a wide deficit. Though the wide deficit remained, but the projections in terms of oil production and the price level, the oil price level at around $65 per barrel, and then production levels at 2 million barrels per day. Production is more realistic than what we've seen in previous budgets. So the exchange rate at around 1,500. We are currently at around 1,460. So largely the parameters that are being used for the medium-term expenditure framework, especially for 2026 budget, appear more realistic than what we've seen in the past.
Okay, so they appear more realistic. So we have a more realistic assumption compared to what we have in 2025 budget. Now, I don't know if you've been tracking the implementation of the 2025 budget and where we stand today. But what is very obvious is that we are going to have about 16 trillion naira in debt servicing costs. What do you make of this, especially looking at fiscal sustainability? Because this is significant if you look at how much this is going to go from the 2026 budget.
Well, yeah, the concerns are around fiscal sustainability and mainly on the debt side. And so the challenge would be that if we have shortfall in revenue, then it's likely going to affect capex spending for the period. So although we have the tax reforms coming, so the government is expecting to generate more revenue from taxes, but the wide deficit of about 20 trillion naira, we know that the government will seek to source that from the local and international markets. So it's just where we're coming up from 16 trillion naira deficit levels to around 20 trillion. So it's really that deficit will be sought from the market. There is a tendency that it will crowd out the private sector, like what we've seen in recent times, where the rates at the treasury bill market, the long end of the treasury bill market, have continued to edge upwards because the government is taking in those funds. So investors are pitching at high rates. So we may go into 2026, though the expectation was that there will be a drop in the monetary policy rate, and then borrowing costs will be cheaper. But given the depth of the deficit that the government is looking to take early in 2026, we may see these high rates, persistent high rates going into 2026 because of the government's borrowing plans.
Yeah, that's true because only I think at the beginning or close of last month, the DMO actually revised the bond and treasury bill issuance calendar, and that really jacked up the amount they wanted to raise for the end of the year. And that's not also considering what the amount of deficit that needs to be financed going into 2026. So I agree with you that that will continue to see persistent high interest rate. If you ask me, that would be good for investors who are looking to put their money in the fixed income market. But let's talk about the larger risk that this may pose in case, I mean, in terms of the revenue projections for the government. So the government is largely expecting increased crude oil production, and obviously we've seen their projection for crude oil price. Are there any type of potential risks that might see in case there are, I mean, oil crude oil prices drop and non-oil underperformance? If that were to happen, how would this impact the implementation rates for the 2026 budget?
Yeah, there is the risk of lower crude oil prices. If we see a resolution to the Russia-Ukraine war, then
Yes.
with the Chinese economy slowing down, then we could see lower crude oil prices. The volumes are really, in terms of production volumes, they are really within our control. And so hitting the target of about 2 million barrels per day is a realistic target for us. But the risk is really with international crude oil prices. And like I said, the capex expenditure for the government, and then we'll see a very low implementation rate for the budget if those are not met. So the risk is in capital expenditure and also the rates of implementation of the budget if we see those revenue shortfalls.
Okay. So for an investor watching the market and looking at this 2026 budget proposal, how do you think the proposal would influence investor sentiment, especially regarding the amount of deficits, the economic diversification, and the potential impact on inflation and naira stability? So we have governments going all out to spend, and then we still have the issue of the exchange rate. The naira is still weak, and we'll have a persistent inflation as well. So, how do you read this as an investor?
Well, typically investors follow the money, and the government is a major spender in the economy.
Yeah.
So, for particular sectors that will attract this expenditure, investors will be looking at those sectors because government spending will multiply. There's a multiplier effect, in those particular sectors. So investors will be looking to um, go with the government, so to say, into those sectors. However, if we do not see an increase in production in those particular sectors to match, or in the economy generally, to match the increased spending of the government, then that would put some inflationary pressures on the naira, and we might see inflation maybe ticking upwards. The projection for general analyst projection for inflation is that would average around 20% for 2026. And so that is likely going to be that we see inflation numbers tick upwards from the current levels, from what we're expecting a 15% reading for mid 15% reading for the month
For
of
November?
November and December. So
Okay.
if this the government expenditure, the inflationary pressures will come back to to affect consumer spending and the disposable income.
Oh, so do you think that this is one of the reasons why the MPC declined to cut rates initially? They expect that inflation will continue to go up. Do you think this is one of the reasons why they didn't cut rates in the November meeting? Hello?
Yes. So the part of the reason was because of the festive spending that was expected in the month of December and going into January, the festive period. So that would cause some uptick in the inflation numbers that we're expecting. So that's part of the reason why we believe the MPC decided to hold
To
rates
hold.
and just do a technical cut on the asymmetric corridor side. Yeah.